From FXEmpire, this is Chris. Taking a look at the upcoming 2024 year in the S&P 500. You can see we are approaching, at the end of the year, we're approaching the absolute highs back at the beginning of 2021. I suspect as we close out the year, we're going to be somewhere around there. Now, the question is, do people step in and start buying right away? Well, no, they won't. The market will clearly see some type of profit taking at the end of the year. That's generally the case. And 4,500 and 4,200 underneath both offer support. This year is going to be a mess. Volatility is going to get worse, not better. We're already starting to see the Federal Reserve perhaps pivot. The dot plot at the December meeting suddenly showed interest rate cuts in 2024, something that we had not seen previous meetings. So Wall Street's celebrating that. Generally speaking, though, what happens is the Federal Reserve is almost always late. So they start doing emergency cuts because they see things that are not good in the economy. The track record of the Federal Reserve of steering the economy is absolutely atrocious. And to think that suddenly they know how to do it would be a little bit of a fool's errand. So I do anticipate that we are going to get a massive sell-off in 2024. That doesn't mean that we're going to end the year down. I anticipate we probably have another one of these wicked sell-offs and then a rip higher once the Federal Reserve steps in and starts buying things like corporate debt. You are already starting to see the corporate debt markets freeze up a bit, and the Fed stepping in to do that is a form of quantitative easing. And then, of course, Wall Street celebrates. That being said, I don't like the idea of chasing the stock market. As I record this, we've had 1, 2, 3, 4, 5, 6, 7 positive weeks in a row. Might be a bit much. But eventually we'll have 3 or 4 negative ones in a row. And, you know, the old adage, you take the stairs on the way up and the elevator down. It's probably going to play out this year. This is going to be a scenario where I want to see a 10% drop sometime during the year, and then I'll start to add slowly to an investment position. It basically, for me, is setting up as a repeat of 2023, maybe even 2020. I mean, this was drastic, obviously. I don't know that it's going to be that bad, but you can see by the end of the year, we were positive. I think you're probably going to see another V-shaped year. It seems to be what this index does. And then, of course, with the Federal Reserve seemingly getting ready to shift, generally what happens is by the time they start cutting rates, the recession's already gripped the economy. I can tell you, living in the United States, the economy is nowhere near what you see on financial channels. Eventually, Wall Street will find retail traders to come in and say, here, hold my bags. They'll hand you their stocks. You'll capitulate, lose 10, 15, 20%. They'll come in and buy them back up. That's, it's a rinse and repeat cycle.